Meantime, Pimm Fox joining us from Hollywood, Florida here at the Global Metals and Mining Conference with his own special guest. Pimm?
Thank you very much, Laura. Yes, my guest is Egizio Bianchini. He is the global head of metals and mining for BMO Capital Markets. Egizio, good to have you with us.
It's good to hear.
So, all right. So now I know that a lot of your focus has been on China raising money for Chinese metals and mining companies. Tell us about it.
Yeah. Well, one of the things that we did a couple of years ago, well, actually, no, going back to 4 or 5 years ago, we recognized the growing market in China and the need for Chinese SOEs, sovereign state-owned companies, to invest abroad. We opened up an investment banking branch in Beijing, and it's been very successful. We've done a lot of deals. There's a real need for Chinese companies to buy assets. They've got very expansive growth plans. We've all read about them.
And they certainly have a lot of money, right?
They have a lot of money, and they have a lot of money to spend, and they've been mandated to go out and look for assets all over the world. And one of the things that we're doing is helping them go out and find those assets and helping them acquire those assets through our extensive base that we've been able to establish over the last 20 years.
Now is there a real desire on the part to get hard assets? I mean, whether it be copper mines, iron ore mines. I mean, we know that the Chinese economy keeps growing. Is there this hunger, insatiable?
Well, it's insatiable. I think there's a real need. It's a real need to get the raw materials for growth. I mean, the economy is growing at on the low end 6% a year, on the high end 10% a year. That requires a lot of copper. It requires a lot of iron ore. It requires a lot of met coal. And the concern there is if they don't have access to it, that they might be buying it in the open market at higher prices. So they want to get those hard assets and they want to get them under their belt.
What about the access to capital right now? Is the credit market are the credit markets back to where they were, let's say, before the financial debacle, so that companies can access the credit markets at a reasonable rate?
Well, I think a couple of things. I think access to capital is much better than it was a year ago. I think a year ago
it was rotten a year ago, right?
It was rotten a year ago. But if you go back before that, in the metals and mining space, there were 3 separate syndications of about $50 billion each. So, there's roughly about 50 banks in the world that lend to the mining industry, and amongst those 50 banks, there was roughly $150 billion out to just 3 different endeavors in the industry. I don't think we're back to that level yet. I'm not sure if we're ever going to get back there, Pimm, but I think the market is open. I think there's different sources of capital. The traditional banking capital is maybe a little bit more limited, but there's a little bit more private equity coming into the game, and a lot of sovereign wealth funds.
I was going to ask you, what about sovereign wealth funds?
Well,
I mean, we haven't seen them participate in a big way. Is that the next big wave, do you think?
Well, the Chinese have begun to participate. The CIC has come in and made some significant investments. We think that's going to continue to grow. We think that's a source of capital that mining companies will continue to tap, and we're certainly helping to bridge the mining companies with that capital. That's one of our endeavors.
What about the localities that are really friendly to foreign capital? Is it Canada? Is it Australia? We know that they've run into some problems in the United States.
Yeah.
Are those the locations, Australia, Canada?
Yeah, I think Canada has been a good place for sovereign wealth funds to invest in, especially the Chinese wealth funds. I think the Chinese have had different levels of success in different parts of the world. But I think as the world begins to adjust to the new reality that this is real money and it's money there to help grow these assets, I think that the governments are going to come to the realization that this is friendly money. It's not unfriendly money. That's our view. So it's been a little bit rocky for the Chinese, but I think it's going to smooth out over time.
I want to give you the last word. What's happening with metals prices, gold, whether it be hard assets, precious metals, or even industrial metals? Is that all going to climb this year?
Well, look, I think right now in the metals complex there's always a bit of speculation. So you have to be concerned about the fact that a certain portion of all metal prices are due to speculation. In the long run, though, the need by China, the need by India and other emerging economies, as well as the established economies having to rebuild their infrastructure, is going to be very positive for metals prices. And that's certainly the way we're conducting our business, with the expectation that we're going to have elevated prices for some period of time.
All right. I want to thank you very much, Egizio Bianchini, the global head of metals and mining for BMO Capital Markets, reporting from the BMO Capital Markets Mining and Metal Conference here in Hollywood, Florida. Back to you.